majority of global trade right now still heavily relies on paper documentation. And I would say this is one of the biggest barriers to shrinking the trade finance gap as well. We allow members of the supply chain to, instead of issuing the paper document to represent right of ownership to the cargo, to issue it as an on-chain digital asset. What's important from the legal standpoint that our solution is approved by the organization called IGP&I Club, the international group of P&I clubs. The biggest transaction that we did was, I believe, 1.5 million.
This is the XDC India Podcast, a platform dedicated to exploring advancements in blockchain technology, innovations in trade finance, and real-world implementations of the XDC Network. I am your host, Kishan Baalaji. In this episode, we are joined by Eduard Oboimov, Chief Executive Officer of eTEU, a company addressing the 2.5 trillion global trade finance gap by digitizing trade documentation and enabling on-chain ownership of cargo in transit. By reducing administrative burdens and unlocking liquidity, eTEU is poised to transform the global trade landscape. Edward, thank you for joining us.
Thank you, Kishan, for having me, and thank you for this opportunity to explain what we are working on.
Superb. So let's head over to the segment one, which is understanding the trade finance gap itself. So to begin, let us examine the structural challenges facing the trade finance industry. Why does the global trade finance gap persist, particularly for small and medium-sized exporters? How have outdated paper-based processes contributed to delays, increased costs, and limited access to financing?
So I think the core thing to understand here is that majority of global trade right now still heavily relies on paper documentation. The single document which pretty much represents right of ownership to the cargo in transit, called bill of lading, is still issued as a piece of paper in over 94% of maritime shipment. And in order to pass the right of ownership to the cargo between members of the supply chain, this document is physically delivered around the world by the courier post like DHL, FedEx, or something similar, which is the fact that I usually find surprises people outside of, so to speak, logistics or trade finance industry. And I would say this is kind of one of the biggest barriers to shrinking the trade finance gap as well, because in order for you to leverage the cargo which is traveling, cargo in transit as collateral, you physically need to deliver this document to whoever is lending this capital to you. But then most importantly, this person lending, they need to verify that this document, it's all good with it, it hasn't been tampered, haven't lended it as collateral to 10 other banks. So the whole process becomes very time consuming, very prone to fraud and prone to mistakes. So this kind of significantly increases the administrative overheads involved in the trade financing and makes it economical to only lend to large businesses with large sizes of transactions and accounts. That's where the trade finance gap is coming from.
I can't believe this, actually. To be honest, this comes as a big surprise to me that it's just a piece of paper. Really?
Yeah.
Wow.
Yeah.
I can't believe there is so much of trade happening on a daily basis, but it's just one piece of paper. That's just crazy. And yeah, thank you so much for putting it, so simplified as well. So additionally, while fraud prevention is crucial, many existing measures inadvertently create further barriers. Have any recent regulatory developments positively impacted the space, or is the industry still grappling with the same obstacles?
That's a great question, actually. So I think one of the key barriers for the adoption of digital systems and for replacing those pieces of paper was lack of proper legislation and regulation, both on the national levels, but as well internationally within the industry. One of the significant developments in the last couple of years was introduction of something called MLETR. MLETR is Model Law on Electronic Transferable Records, which is a standard, let's say, set of rules and principles introduced by the United Nations to enable kind of digital versions of trade documents to exist. And this is a so to speak, enforceable law, but rather a recommendation, which was presented to national governments by the United Nations with a kind of recommendation to implement them. Then it took a couple of years as everything with the governments, but recently major trading economies and trading governments started implementing the MLETR in their own legal systems. And the specific legal system on which as eTEU as a platform is based is English law. And it's important to know that English law is actually underpins 80% of all global trade internationally. So trade transactions globally mostly are based on English law. And at the end of 2023, like beginning, so to speak, of 2024, English law implemented the legislation called ETDA, the Electronic Trade Documents Act. This act pretty much equates any electronic trade document issued in accordance with the set of standards to the paper document. So this kind of created a floodgate for the digitalization of then all trade dependent on English law. And we also see some other governments, Singapore actually came as well to adopt MLETR legislations. We see India moving towards this direction, and I think the similar legislation is currently under the discussion in the government. France is in the process of implementation. So the world is starting to move there. From our perspective as eTEU, we're based on the English law and based on the Electronic Trade Documents Act, which, as mentioned, underpins 80% of global trade, which opened up for us an ability to digitize this document and digitize the right of ownership to the cargo. So
I just feel like I'm learning so much more and more as you speak. Thank you so much for educating me as well as the audience, with all of these facts. Only the people who are actually doing it will understand what's actually going behind this. So 80%, is it?
Yep.
That's insane. So moving on to segment 2, which is eTEU's technological approach. Let us now explore how eTEU is addressing these long-standing inefficiencies. How does your platform transition from traditional paper documentation to blockchain-enabled digital assets? In particular, what makes the electronic bill of lading such transformative development? You've introduced a mechanism allowing exporters to use in-transit cargo as collateral. Could you explain how this is implemented and what advantages it brings? I'm sorry, it's a long question, but it's a two-part thing, so please do let me know.
Yeah, thank you for this question. Pretty much the way the eTEU platform functions is that we allow members of the supply chain, so let's say exporter, importer, and the logistics provider, to, instead of issuing the paper document to represent right of ownership to the cargo, to issue it as an on-chain digital asset. What's important from the legal standpoint, that our solution is approved by the organization called IGP&I Club, the International Group of P&I Clubs. That's once again a bit more statistics. That's a single organization which ensures over 90% of all seagoing cargo. So pretty much most of the cargo that is not sanctioned is insured by a single organization. And another significant barrier for the digitalization of the bill of lading previously was the fact that each electronic bill of lading solution, which is presented to the market, has to be approved by this organization, that it ideally replicates the way the paper document would function in the physical world. It represents it in the digital world. And this is a very long regulatory approval process. It took us 2.5 years to go through the approval process with them. This includes both approval of your technology, but also most importantly, how your terms and conditions of your platform function. And this is a very comprehensive legal document which makes sure that all users of the platform in the court would honor the digital document the same way as they would honor the paper document. And we were the first IGP&I approved platform which also placed right of ownership to the cargo on chain. So not just created a digital instrument within, let's say, the closed ecosystem of the database, but actually allowed issuance of right of ownership to the cargo in the form of the electronic bill of lading as an on-chain digital asset, which from our perspective is a transformational development, because now you can not only swap out the paper and save some time and money on sending it around the world, but you are actually unlocking billions and billions of dollars in liquidity, which is pretty much frozen by goods stuck in sea. And this important asset for exporters not being utilized pretty much while the goods are traveling to their buyers in other countries.
Wow, yeah, that really makes sense because whenever I try to import something, it's just stuck in transit forever. Like if you have to do it on a personal level, it's so difficult to do it. Like I was trying to get something from abroad. I wanted to get some drum equipment, and there was so much of paperwork to fill and so many things to do. And it's great that you guys are solving for all of these. But how do you deal with, all the red tape with the officers? And, there's so much of hand holding and things that go on while trading. So how do you deal with that? Do you feel a lot of resistance from, the governments and the agencies and all of that?
I think it comes down to overcoming this red tape and finding a clever ways to do it. As mentioned, not all governments kind of equate electronic trade documents to the paper ones, but usually what governments require is not the original version of the document, but a copy of the original, which you would upload and present somewhere. So we have a function within the platform which allows you to download the copy and present it to, for example, customs officer, etc., if you need to. And also, as part of this IGP&I requirements, we have a function called change to paper, which allows you to swap the, so to speak, medium of the bill of lading and reissue the paper version in the port of destination. If, for example, your cargo gets stopped at customs, they suspect that you're importing something illicit or something like that, and they would demand the paper documents if this country hasn't implemented, for example, if it's not Singapore, UK, etc., they would demand paper documents. We have a function which allows you to kind of burn the token on the blockchain, so burn the on-chain version of the document and reissue it as a paper version at the office of the shipping company in the port of destination and present it to authorities if you have to.
Wow. That's a really amazing feature. I think that's a real solution. Furthermore, the trade finance ecosystem includes various blockchain platforms. How does eTEU distinguish itself from alternatives such as Marco Polo Network, Contour, or V.Trade?
So I think it's important to know that trade finance is a very kind of diverse sphere, and some things which are considered generally trade finance doesn't really involve, so to speak, lending. So what do platforms like Contour, Marco Polo, V.Trade did or do? They facilitate the issuance of the document called letter of credit. So what letter of credit technically is, it's a guarantee by the importer, so the buyer's bank, that the importer is going to pay for the shipment when all the conditions of this letter of credit is satisfied. So, for example, the cargo is delivered and the quality of the cargo is checked by the independent surveyor at the port of destination, or, for example, the documents are passed to the bank and they check that everything is in conformity. That's the kind of guarantee between the parties that the bank would pay. Because usually how, I think it's important to note how the traditional transaction would work. Imagine there is a grain trader in Poland who is exporting grain, let's say, to China. Usually the way the process would work, the grain trader in Poland would load his grain onto the ship, get the bill of lading piece of paper again from the shipping company to represent that despite the fact that physically grain is in the possession of the shipping company, but legally this trader in Poland is a owner of this grain, and then this grain would set sail to China for, let's say, 30 to 45 days. Then his buyer in China would only pay when he receives the grain in China, checks the quality, and then send the money. But the issue is here we have kind of lack of trust between the parties, because either the guy in Poland needs to send the bill of lading first to China for the guy to claim it, or the guy in China needs to send money to the guy in Poland and hope that he would actually send him the right of ownership to the cargo and not sell it once again. So that's where those platforms like Contour, V.Trade, Marco Polo, etc. come in. They provide the letter of credit solution. They don't provide the letter of credit solutions themselves, but they work with banks which serve those buyers in China, so to speak. And bank comes in, issues letters of credit and says, okay, if you don't trust my client here in China, but you do trust, let's say, ICBC Bank, and we guarantee you that if the grain is of good quality, if we receive the documents, the payment will be released to you. That's what letter of credit is, and that's what those platforms do. But the issue that we are solving is actually the duration of this journey, those 30 to 45 days, while the guy already paid for the grain, loaded it to the ship, sent it off to China, but he still haven't received the payment from his buyer in China. And he, for example, wants to grow his business and he wants to use this kind of locked working capital to buy more grain and to sell it to another guy in Turkey or in India or somewhere else. And that's where we come in and we say, pledge your cargo as collateral. When you get the payment from the guy in China, you can repay the loan with interest, but in the meantime, you as trader are able to use working capital to grow your business.
Wow, that's an amazing solution. How did you come up with this? So, have you been in the shipping? I mean, you obviously must have been in the shipping industry for a long time to understand how these things work. Were you working somewhere dealing with all of these things before?
Yeah. So in terms of my background, I come from the family which was in the logistics business for the last 3 generations. So I have kind of seen from early age how those things work. My personal professional background is in actually IT and software development. So I did work in the IT world for quite some time, and then I decided to, let's say, come back, so to speak, to the roots and try to tackle those issues which I have seen. We initially set up the eTEU as a software development company for specifically the logistics sector, and we were pretty much creating document process automation solutions for shipping companies, commodity traders, freight forwarding companies. We worked like that for a couple of years, and we have implemented automation solutions for some of the leading multinational commodity traders, shipping lines, etc. And then we decided to go into, let's say, build our own product instead of developing dedicated products for those companies. And that's how we kind of started eTEU as its current iteration, because we have seen that despite the fact that we were changing the way the processes of preparing documents were working and changing how the back office was working for those companies, this key bit was still kind of at the end of the day being issuing paper and kind of being locked out of all those opportunities. So we decided to develop our own product.
Wow, that makes sense. There's so much of documentation, so many things, logistical issues that happen, and it so happens that one thing that I was getting was from Poland. And it was a double pedal for my drum kit, and the documentation, it just kept going on and on and on, and it took me almost about 45 days to just receive a pedal. By then I'd lost interest in the pedal itself. But yes, it's really interesting. Thank you so much for being so patient and answering all of these questions. So moving on to segment 3, which is measurable impact, let us shift to practical outcomes. I mean, you've already spoken about some of the practical outcomes, but could you share a specific example where eTEU significantly improved trade finance efficiency, perhaps the instance where a loan was processed in just 3 hours?
Sure. So in terms of the specific cases, and I think this is a great story which we would like to share. And this is something that inspired us to actually work on the, let's say, trade financing route for the commodity traders. We had one client who's a mid-sized metals trader based in Ukraine, and he was our client for the process automation side of things and the electronic bill of lading. And in one of the conversations, he mentioned that he was trying to get a loan from like private lenders back in Eastern Europe at 24% annual interest. And I was blown away by the interest rate, and I was like, why don't you go to the bank and get a proper loan? Like, what's wrong with it? Interest rates might be high in developing countries, but not like 24%. And the issue he was facing is that actually as a trader, he doesn't have any assets as a regular business would, because as a regular business, you have your factory, you need more working capital, you would pledge your factory as collateral and you would get a loan from the bank. But as a trader, you don't really have much assets. You might have like a warehouse or something like that, but it's disproportionately small compared to the, let's say, turnover you would be dealing and trade volumes you would be dealing as a trader. So he pretty much didn't have any assets to pledge to a bank, and he had to get an unsecured loans in order to finance the growth of his business. And that's what kind of gave us an idea that, wait a minute, what we actually did when he started implementing the electronic bill of lading, we placed right of ownership to his in-transit cargo, to which he's waiting to get the payment on chain. And we pretty much have this, his main asset, which is goods in transit, which he hasn't been paid for, but he already paid himself, and it's traveling to his buyer on the platform. So we worked on the pilot case study where we engaged the Swiss Family Office as a lender for this, so the private credit lender. And we have been able to get a loan for this metal trader at nearly twice smaller percentage. So he was regularly paying 24%. He did get a loan backed by his right of ownership to the cargo at 14% annual interest. We significantly shrinking the time it takes to get the loan. So the process from requesting the loan and submitting the kind of documentation via the platform to getting the loan from the Swiss Family Office, as you mentioned, it was 3 hours compared to a couple of weeks, which it usually takes with trade financing banks. And he was able to get the loan at nearly twice lower percentage. It was a loan for $1.2 million backed by right of ownership to his steel shipment from Turkey. So that's kind of the first case study that we did. Since then, we did a couple of other pilots where right of ownership to the cargo on the eTEU platform has been used as collateral for the loans. And we want to grow this further.
Wow. From 3 to 4 weeks to just 3 hours it's insane. I mean, it takes us 3 hours to just travel from one part of town to the other. Sometimes forget getting 1.2 million as a loan, but that's amazing. So what cost savings? I mean, you've already discussed that you cut the interest rate from 24% to what, 10%? No, 14%. 14%. Sorry. So that in itself is a huge cost savings. So what has been the most substantial transaction process through the platform to date? And what feedback have you received from both exporters and capital providers in terms of usability and impact?
So to date, the biggest transaction that we did was, I believe, 1.5 million. In a similar manner, I think in terms of the feedback from both exporters and lenders, it's an overwhelmingly positive feedback, and there's huge interest that we see from the alternative capital providers to this kind of solution, because this side of financing and lending was usually reserved for trade financing banks because it required a lot of expertise to make sure that the documents are actually original, that it's all good, to develop relationships with those traders, etc. And we kind of solved this issue by creating an immutable trail of document ownership and its validity on the blockchain, and simplifying it for any alternative lender who wants to go into this high yield trade financing business, which is underserved by banks, because as mentioned, banks do work with trade finance, but the surprising thing that we have seen that they usually do not work with traders who, they're considered SME, but some of them might be doing over like 100 million in annual revenue, which is, from my perspective, is a pretty big business. But from the bank's perspective, they would kind of shy away from this type of traders because the account is too small for them to deal with the documentation. And that's a sad truth. And that's, in a way sad, I think good for us. That's where the trade financing gap is coming from. And that's the gap that we are aiming to shrink. I think in terms of the focus for us right now is to scale this further. As mentioned, we did 5 million in pilot transactions in terms of financing. Throughout the last year, we also been working on the plain EBL business, and on the EBL business, we processed over $100 million worth of trade transactions where just the right of ownership to the cargo was exchanged between the commodity traders. And we pretty much want to onboard more capital providers to fund those trade volumes that we already have on the platform and grow those trade volumes further, because we have a huge network within the commodity trading industry. I think the core goal for us right now is to streamline this process, because in the pilot transactions that we did, we pretty much had to do many things still manually, like trader onboarding, getting the KYC, AML process on those capital provider and the commodity trader. Would like to integrate the third-party providers there. I would like to launch ability for the DeFi liquidity to come into this industry and kind of fill this gap. So a lot of things to do for us, and a lot of things to still develop within the platform, but I think initial feedback is very positive.
Wow, I'm just blown away by the amount of information that you've shared with me and with all of us, because this is gold. This is gold for people who don't deal with shipping, and if they want to understand really what's going on in the background. And taking it further, you're introducing blockchain as well. It's really great. So we'll head to the next segment 4, which is, why did eTEU choose the XDC network?
I think there is a combination of factors. Definitely the, let's say, technical capabilities of the network. So the speed of transactions, the low cost of transactions, the ability to use gasless subnets to test some of the transactions, pretty much in this hybrid private public state. So a lot of great technical features. But also the important point that I would like to mention is an ecosystem and focus of XDC Network on the RWA and trade finance use cases specifically. We're in touch with many other projects on the XDC Network which work within the same space, and I think there are great collaboration opportunities there. So XDC Trade Network, Trade Phoenix, they're all kind of targeting the same problem that we're targeting, the 2.5 trillion trade finance gap, and this ability to collaborate on the same chain with other projects working on the network. I think that's an important reasoning for us, as well as the technical capabilities of the network, to choose XDC and develop further on the XDC network.
Yeah, I mean, the pieces kind of fit. I understand what you're saying because, yeah, trade finance, I mean, our founders as well, they are in the same business as well. So, yeah, it makes a lot of sense. So, additionally, what is the role of the eTEU token within your ecosystem? Are there plans for deeper integration with XDC technology in the near future?
So in terms of the role of the token, we have designed the token utility in order to attract the decentralized finance, or let's say crypto liquidity, into this trade finance gap. What we're aiming to do is to incentivize participants of the, let's say, trade ecosystem, and generally people who are interested in the real world assets backed investments, to get their existing crypto liquidity into this trade finance deals and help to close this trade finance gap. So the main role of the token is to incentivize the attraction of liquidity into the trade finance deals and to incentivize the functioning of the platform. We have created a system which replicates the way, let's say, multi-tiered financing, which shares and slices risk, would work in the, let's say, traditional banking and investment system. We have created a tokenomics which replicates it in the DeFi world. If any of your listeners are interested in more details, more than happy to share more details on this tokenomics. And we want to pretty much, replicate on chain what banks do very costly in the traditional, so to speak, banking ecosystem.
Thank you so much for that. And you were talking about the token, and people who invest in your tokens provide liquidity for whatever transactions are going to happen.
It's a bit other way around. So people who invest in the token, they do not provide the liquidity for the deals with the token. The liquidity for the trade finance deals comes from stablecoins. But people who invest in the token, they get the opportunity to share a portion of the fees generated by the platform for facilitating those deals and for facilitating issuance of right of ownership to the cargo on chain, etc. And also at the same time, they're creating like a security ecosystem for those trade finance deals, so supporting the transaction processing, etc.
Thank you for clarifying that. And where does eTEU position itself within the rapidly growing real-world asset space? And are institutional investors beginning to engage more actively within blockchain-based trade finance?
Yeah, that's a great question. I think in terms of our positioning, it's pretty much helping to bridge those two worlds, the very traditional world of trade finance and international trade, and the world of Web3 and blockchain, so to speak, is creating this intersection where the crypto liquidity can seamlessly flow into the trade finance industry, backed by the real world assets. So we started with placing those real world assets, the right of ownership to cargo in transit, on the blockchain, and we're now creating and connecting to the financial rails on the public blockchain, which would allow this crypto liquidity to flow in this deal. So we position ourselves as, so to speak, bridge between those two worlds.
Thank you so much for answering that question. So the next segment, which is future outlook for eTEU and the industry. Looking ahead, what are the key milestones on the roadmap for eTEU?
So I think key milestones for us is, first of all, getting the, let's say, ability for companies using our platform to pledge their trade finance cargo in the mainstream. Right now, we're still in the, let's say, piloting stage for those transactions. We're looking to raise a seed round within the next 6 months in order to facilitate the development of the full version of the platform, which would include some of the functions function that I mentioned, the KYC, AML at the point of onboarding, assigning the legal entity identifier to each wallet on the platform, creating the ability from the other side for investors of setting up the liquidity pools and for the stablecoin liquidity to flow into those trade finance deals, as well as creating the integrations and connections with other projects on the XDC that I have mentioned. So that's where this seed round will be used for, and pretty much scaling the existing business, so to speak. That's a next immediate goal for us. And after that, we're also looking to launch an ability to stake our own token and earn for owners of our own token the portion of fees generated by the platform, and kind of share this with the community of people who invested in the project.
All the best for your, the raise. It's always a uphill task, and I wish you the very best because you guys are doing some really great stuff, and you are introducing stablecoin staking pool and an automated collateral liquidation mechanism. How will these features benefit both traders and investors?
So yeah, stablecoin staking pools would allow people who have stablecoins to pledge them towards financing of the trade finance deals and earn returns from the interest rates paid by commodity traders. And automatic collateral liquidation mechanism is something that we have designed based on the feedback from capital providers we have been in touch with. So what we have seen that those lenders within the trade finance world, even the big banks which traditionally lend within trade finance, when they get the collateral on their hands, let's say that's as the example I have used, the shipment of grain traveling from Poland to China, well, you're a bank or a alternative lender, and suddenly you have a container of grain somewhere in Shenzhen, but you're not a trader. You don't know to whom to sell it, how to liquidate it, and it's usually a big headache for them and one of the barriers for lenders to enter this market. So we have partnered with a number of commodity trading marketplaces which connect buyers and sellers in the commodity trading world, and we're planning to integrate our solution with them to allow pretty much this digital asset representing right of ownership to the cargo to be placed on the marketplace and liquidated by the lender in case if the default on the loan happens and he gets the collateral on his hands. So it's no longer a headache for them, but they're able to easily liquidate their cargo, recoup their loan, and be more easily willing to invest in this trade financing world because they know there's a safe mechanism for them to deal with this headache if something goes wrong.
So yeah, usually traditional financiers are very tough to deal with. It's very difficult to get money from traditional finances because documentation, red tape, and you have to prove that you have the money to repay all these things. I think it's really great that you guys are solving for this. I think a lot of people will benefit from your solution, and I'm cheering you guys on. So
Thank you.
And finally, where do you envision the trade finance industry in 5 years' time? Will traditional banks adapt to blockchain-based platforms, or will decentralized solutions like eTEU emerge as the new standard?
I think, to be honest, this would be a bit of a mix of both. I think there is enough space for both types of lenders to exist within this market. I think once the, so to speak, alternative lenders and private credit market grows, banks would start to pay more attention towards this, and they would at the end of the day also adopt the same standards. But this doesn't mean that, let's say, alternative lenders would leave the market. And I think in lending markets which are more developed now, so if you follow financial markets, private credit is a big growing trend right now in the banking world, but this doesn't mean that the traditional banks got displaced. They still have the role in the ecosystem, but the gaps in the market are so large and the market is so big that I think there is enough room for many companies to flourish. As mentioned, trade finance gap is currently $2.5 trillion, which is a huge number, which is hard to imagine, to be honest. And it's growing at like 20% a year. So it's a crazy growing market where there's enough space for many companies.
I completely agree with you. I don't know how many zeros are there in that, to be honest.
Yeah.
It's difficult to fathom the scale of it, to be honest. When people say billions and trillions and all of this, it's beyond my comprehension, at least, the amount of money that is involved in this. So anyway, this concludes today's edition of the XDC India podcast. Our sincere thanks to Eduard Oboimov for offering his insights into how eTEU is addressing trade finance inefficiencies through blockchain blockchain, and digital innovation. For further information, please visit www.eteu.co.uk and follow eTEU on Twitter at eTEU Tech. Yeah, and the details are going to be there in the description anyway. So, and finally, if you guys have enjoyed, I've learned a lot about how eTEU is changing the trade finance space. If you are an exporter, capital provider, or investor interested in the future of trade finance, we encourage you to explore how eTEU's blockchain-based solutions can support your operations. Subscribe to the XDC India podcast for continued conversations on blockchain technology and the evolving world of trade finance. Thank you for listening.